Welcome to another episode of AMÉRICA with a French accent brought to you via HappsNews, journalism cross-platform on all your major social networks at the same time. Today, I'd like to go away a little bit from politics to address a story that has been affecting us all around the world, the effect of coronavirus on the economy and particularly on the real estate business here in the US, but also around the world. We're going to go to Paris in a second. I'm really happy to welcome two guests today, two experts in the domain. Alain Azaria, a real estate broker, property manager here in New York City at Dalazar, but he's joining us from Miami today. And Mikael Benfredj in Paris, CEO of Patchwork, a co-working company based in Paris. But before talking with them, I'd like to remind people the reality of the crisis here in New York, particularly in the neighborhood where I evolved in the financial district, downtown Manhattan. Office buildings have been totally deserted. Banks have fled the area. Insurance companies ended their lease and ran to New Jersey or other states. Lawyers gave up their expensive monthly lease to join either co-working spaces or to work from home via Zoom. And the departure from all these companies and individuals have had a total domino effect in the neighborhood. Restaurants, lunch snacks, local companies, hairdresser, beauty parlors, bars and pharmacy, they have been closing down one after the other, giving the feeling of a ghost town in certain streets. Huge brands like H&M have announced the closing of 220 stores, 25% of their brick and mortars worldwide to reflect the crisis. Institutions like Century 21, a local hard discounter of luxurious brands, is closing down. If you visited New York City, you probably shopped there, as it was for decades on the shopping list for everyone. Lords and Taylors is closing down, and the list goes on. Men's Warehouse, Brooks Brothers, Neiman Marcus, these institutions, all American brands, have all filed for bankruptcy since March. Now, a lot of experts will tell you that the coronavirus is just the eyeglass of a crisis that already existed for a long time. Americans stopped buying in stores a long time ago, privileging online shopping, but it does also affect fitness centers and restaurants. The classic Chuck E. Cheese filed for Chapter 11. 24-hour fitness closed over 130 gymnastics. So all these are because of COVID-19. So I'm coming to you, Alain Azaria. First of all, you are a broker, you're a property manager here in New York City. You're coming with us on Happs via Miami right now. Hi, Alain, how are you?
I am good. How are you? Thanks for having me.
Thanks for being with us. I would like to talk to you directly. Do you think that this crisis of the real estate is due to COVID-19, or it's been a long time coming?
Oh, no, it was a long time coming. We were actually getting into a recession type of context, which were already driving prices down. So sellers had the time already to adjust their prices down as far as the residential market in New York City. And then we got hit by COVID. So COVID is a new variable that has had a huge effect on the way people are buying, selling, renting, leasing offices, obviously. And so we can definitely talk about a new era. But as far as the residential market is concerned, we are happy to notice that that is the most preserved asset class in the real estate spectrum right now, because we still have like a 5% demographic growth in New York City.
So it's still growing. People are still dealing right now with a 5% growth.
No, I'm talking about the demographic growth.
Oh, okay.
Okay, I'm talking about that, meaning that basically people will always need to be living somewhere. And therefore, even though we got hit by the crisis, the residential, let's say the smaller apartments are still active and are the most active right now. Whereas we have, let's say, transactions between 0 and 3 million that represent about 85% of all the transactions happening on the market right now.
When before the COVID, it was more on like higher than 3 millions, right? The most transactions.
No, most transactions were also between 0 and 3 million.
Okay.
But the luxury market, which we're talking about $5 million plus listings and above 10 million also and above 20 millions, these have almost disappeared. Like for instance, last week on the market, there were only one contract signed on Park Avenue. That's 9 million. There were two others above 7 million, and then most of them got between the $1 and $3 million market segment. So as far as residential, we are alarmed, of course, because New York City is nothing without the restaurants, nothing without Broadway, also nothing without, you know, this vibrant feel that we can have in the streets, even though we have now the restaurants that have come out, and it's fall right now, so it's still, let's say, still acceptable to be outside and have dinner outside on the sidewalks.
Yeah, just to like give a perspective to people that are not living in New York right now, like restaurants have been closed down until last Monday, completely closed down inside. Indoor was forbidden. They just reopened for 25% occupancy inside. But so in the meantime, what they did is that they took over the sidewalks with like terraces in front of the restaurants, and restaurants have been able to operate at a very small scale with like the sidewalks. But you have to like remind people that still, like, even though a few restaurants were able to do that, a lot of restaurants have been closing down, maybe not indefinitely, but a lot of restaurants were not operating even with the terrace.
David, I just want to point out one last thing also that's really troubling. It's knowing that over 65% of the restaurants in Manhattan will not reopen.
They will not reopen. 65%.
They'll probably reopen under like a different name and different owners. But the existing restaurant, if I take a look at where is my favorite restaurant, it closed. Where is my favorite shop, it closed. Basically, so we are right now in an environment where we're redefining ourselves, and New York has been really good in the past 20,000 since 9/11, has to redefine itself and to reinvent itself in much greater ways, and finding new ways of living, and that's really what's happening right now. There's a trend that is really marked by combining both lifestyle and work environments. So a lot of
the question that people are always asking me, like, is it a buyer or seller's market right now? Like, that's a good question. Like, if people have money, should they invest right now in New York City?
Okay, so indeed, that's a very good question, but the answer is almost obvious that it's a buyer's market, because you have the ability to negotiate a lot of things with the professional, meaning with the developers that are developing buildings. You can negotiate a lot, like a year or 2 years of common charges. There's a 17% year-to-date price drop on most of the listings.
So we would be like around 2000, like the same kind of like prices than 2003.
I would have to check that really to reach a proper answer, you know. But we're definitely getting into a more aggressive buyer's market, in the sense that winter is coming, and as you know, the real estate market in New York is very fluctuates also according to the seasons, especially the rentals. But let's say as far as transaction, we're going to have a lot of deals to make. There's going to be a lot of opportunities, I would say, starting next year. They're not yet out there. I mean, we keep our eyes on certain products, and especially the townhouse market, where more and more New Yorkers have been moving to Brooklyn, for instance, or upstate New York.
Because they also want to have like maybe an outdoor space that the COVID like gave them. Like, I know it's the case in Europe, for example. Like, a lot of people have been wanting to escape their apartment with no outdoor space. So do you think they are trying to move to Brooklyn also because they want to value the idea of having an outdoor space?
Yeah, space is definitely a criteria that has inflated in people's mind, and now they do want that. I mean, who's going to buy right now a 10 or 15? You know, if you don't have like a huge outdoor space, who's going to buy even a $3 million apartment where there's no outdoor space right now? But that doesn't mean it's not going to change. Because if you do have a lifestyle in New York City where you don't have an outdoor space, but you do have a certain lifestyle that allows you to still find some balance, then it's totally acceptable.
I think that
You
a
know,
lot
to
of
live in an
people are
apartment
living in
that
New
has
York right now to go to Brooklyn, but also outside. You're in Miami right now to look at new perspectives since everyone is leaving the city. So tell us maybe like, let's try to be optimistic, or where should be people investing right now? Give us some hope. I always like to look at the brighter side.
You're right. It's important to look at the brighter side, you know, but like hardcore investors, really savvy investors that know, that have been investing in real estate, they right now, they're really waiting. They're really waiting as far as New York City because they know it's going to drop more. And people who want to combine lifestyle and investments, then they're looking at lots. They are looking outside of New York City. They are looking upstate New York. They are looking in the Hamptons, especially in the first part of the Hamptons, not to be too far from the city, let's say until East Coast, for instance, like an hour and a half from the city. And they also, you know, there's definitely a trend that is going to stay. It's going to stay for a while, trying to combine both the work environment and the personal environment. Like, for instance, you can run your conference calls and see your children diving in the pool.
So that's here to stay, you think?
It's not so bad.
It's here to stay.
I believe it's here to stay at least for a while. And most of the experts on the market are talking about 18 to 24 months until that trends really settle and that we will see New York City really back pumping to its full potential. And we really know how the size of New York City potential, especially during in crisis where people come together and reinvent themselves very well.
Alain, if you can stay with me a little bit longer, I'd like to go to Paris, where we are joined by Mikael Benfredj, the founder and CEO of Patchwork, a co-working space in the French capital. And I know, Alain, that you have a lot of knowledge in the area. Let me ask Mikael, how was Paris impacted by the crisis in terms of commercial real estate? Is it a good time to have invested in co-working?
Hello. First of all, I'd like to say that it's very sad to hear that kind of news coming from New York. I mean, we've all been there, and hearing that kind of ghosty town is very frightening, actually. And
yeah, New Yorkers are resilient, and you can count on New York to like come back for sure. It's gonna take a long time. I like to compare it as like a huge train that had to stop and pull the alarm like overnight on March 12th, and the locomotive is going to take a really long time to pull all the wagons. But I think that New York is a very resilient town. So
I hope so, and you can count on all the international people that going to come back to New York as well. Yeah. And actually, when I hear that, I have to say that Paris and France overall are not so hit by the coronavirus. Obviously, on the office market, the numbers of transactions, especially this summer, on the large building, especially as well, has been going down. That's obvious because of many different stuff. There's important decisions that are being postponed to a later date, and we are not in a scenario where everybody's frozen. It's just that people are thinking more and more than before. I think we have to give credit to the French government, who gave a lot of money through the BPI to sustain it. This is the French bank, the bank, the public bank of investment, Banque Publique d'Investissement, and it has been very effective. First of all, the prices to lease an office floor in Paris hasn't moved that much. It hasn't been affected so far.
Not many fluctuations.
There has been some adjustment because also the market was firing up in the last 18 months before the coronavirus. So I guess even if there wasn't any coronavirus happening, it might have happened anyway, the adjustment I'm talking about, especially in the high-end market. There's no more crazy prices. So for us,
Your industry is the co-working industry. So can you just give us a very short definition of the co-workers?
yeah,
I mean,
we prefer to talk about the flexible industry. We like the solution to the in France. Probably many of the person who listen to that know that, but in France there is a very strict way to take a lease when you want an office. It's a commitment for 3, 6, or 9 years, and you have to give a lot of credential to the owner. So it's very, very heavy stuff to do.
Much easier to like get a working space than when you have to like apply for a 3 years lease and
yeah. And so we are a solution, and we are a flexible solution, flexible
okay.
in terms of commitment first, and also in terms of in and out. You don't have to make a refurbishment. You don't have to buy new furniture. The flexible industry that we do, the things that we do is that we put office chairs, even phone booth. We have kitchens, coffee. Everything is already ready, and it's a plug and play solution. So it was already popular before the coronavirus.
I like the kind of business that could save the office industry in New York City.
Co-working. So co-working, we have a lot of examples actually from international companies that have opened their flagship office on the East Coast. And we see that the whole business model is being redefined. Especially, I mean, with COVID, we were talking about just like distancing, but then you have to rework all those numbers, right? Because if you cannot put 8 to 10 people in a space that where you could do that, and now they need to be 3, then obviously we have a problem.
At Patchwork, you have solutions like this in Paris, like trying to adjust with like the new way of like working. Because to be very honest, I've been working remotely since March. Haven't been in an office space at all. Upgraded my computer and my webcam. I mean, it's been like a dream for like independent workers like me, and that might have been in the past seduced by the flexible kind of way, the patchwork or we work kind of way to go to.
Yeah, but there's different market inside the flexible industry and the co-working industry. The market that we are addressing here in Patchwork, it's the market of pretty large company. The average size of our client is 30 to 50 members. We already are hosting companies of 100 and 150 person, and they cannot put everyone on remote forever. They have to keep an office, and they have to have an office. What's happening, obviously, that they're gonna take less seats. For 100 person, they're gonna take 80, maybe 70, maybe even 50 seats. That means that we're gonna have more members in terms of numbers of companies, but it doesn't mean that we're gonna have less income or less person paying for this. What you're raising, Alain, is very important. This is the social distancing problem, and we all hope it's going to be a temporary problem, because it's actually going to affect everyone like a domino. Because if we, as a flexible industry or a co-working industry, have to make everybody away from 4 meters or 5 meters or 10 meters, whatever the social distancing rule.
Yeah.
Then the renting part is going to be the same thing, because when you have to take a lease, a regular lease, there's rules and there's a size where you have to put people in. And
note from like the debater of tonight, you can put plexiglass around everybody.
Yeah, that kind of solution we did for some companies that ask for that. Actually, the most things that they have done so far, and it's because we all hope it's going to be temporary, is that they organize a turnaround of people inside the office, and they allow only 50 or 60% of the person inside their private offices. This is the way it works, and it's still a bootstrap solutions so far, but the thing is, we have a very very strong and very dynamic demand from the corporate company that used to have big lease. I'm talking about people that used to have towers in La Défense. Now they are thinking about going flexible, like full flexible. They want to give back the lease. And what is going to happen? It's like a tsunami that's going to happen and it's going to take a few months because
So is it time
all
for
the
you
lease.
to invest in more space? That's what you think?
Yeah, it is. I think it is. What we don't know so far is how long this actual period is gonna stay like this. For
That's
how long are
the
we
main
gonna?
question, and we were talking with Alain. Is it something that's here to stay the way we are working right now? That's the biggest question.
Yeah. But even though the way we are working is going to stay, like we're gonna have a lot of more remote people, we're gonna have a lot of experience needed inside the office, etc. That's true. But what's going to happen one way or another is that company gonna have to gather to work to give culture to their company. Now companies that are going very fast, all the companies that you're using, all the product that you're using are built by companies that have been fast, and they have been going fast because they have a very strong culture inside the company. And you cannot build culture remotely. You have to onboard people.
You've been trying. I mean, that's kind of like the philosophy of the co-working world, like at Patchwork or elsewhere. Like it's kind of the boutique hotel of office space. Like so, you kind of try to like bring some culture or the way to like to address workers in different way than they used to be.
Yeah. We try to adjust the product that we are fitting it. Obviously, we cannot go blind on that. We cannot do like nothing has happened. So we are going to adjust. We are creating new product in terms of a type of commitment. For example, we sell more badge access than numbers of seats for a company, because there are 50 people, they take 25 seats, but they want 50 access. So we give them that, and we try to organize that. So we adapt on the software that open the doors and etc. We're going to probably move a little bit on the cursor regarding the numbers of meeting rooms towards the numbers of seats inside the building, because meetings are going to be a very important way to gather the people. For example, we can see even in our own buildings. So far, we have 8 buildings in Paris and something about 50 or 60 meeting rooms. We are seeing a very large increase of people wanting to meet from outside the members. We sell a lot of meeting rooms hours nowadays.
I have a question specifically about WeWork, because we cannot talk about co-working without talking about WeWork. They've been complaining a lot to their landlords here in New York during the shutdown back in May. WeWork is the largest renter in the city in terms of surface. It's been called a house of cards, a Ponzi scheme by many real estate companies. What's the perspective from a real estate professional point of view? And I can ask the question to you and to Alain as well. And if co-working is the way of the future or the present, what's the future of WeWork, do you think? Mika?
Alain, okay. First of all, I would say that there's a lot of attention that have been putting on WeWork because of all the money they raised, because of the founder that we can see on the screen now, who is a very charismatic guy and who gather a lot of attention. But the story behind WeWork is not the story of the co-working business. The story behind WeWork is the story of a failure as a company, a failure as a management, a failure as a way to deal with a lot of money. I would say it's like Enron for the energy. So behind WeWork, there's a lot of operators that are profitable. We can talk about Regus, that everybody knows around. It's actually a listed company for 25 years. It's been profitable for 25 years, even during the 2008 crisis. The stock market of the ticker of Regus this year has been up for 30%. The founder buy back a lot of share himself. So it's a pretty strong business. And WeWork is...
Basically, you're saying that don't look at what WeWork is for our industry. We are so much more than that.
I think so, and there's numbers to prove it. And WeWork was great to put attention on this particular business. Actually, it helped us to evangelize people to get to that kind of solution, a flexible solution. And we actually are kind of eating the fruit of that evangelization. So I'm pretty happy about that.
We're grateful about from WeWork, but basically
Yeah.
saying just don't identify us as that.
Yeah,
Alain, are you still here? What's your perspective on this topic?
Can you repeat the question?
Yeah, what's your perspective on this topic about WeWork, like monopolizing the focus on it as the flexible kind of like offices, but not being maybe not being like the most exemplary in the industry?
No, I think like Michael said, I think there's like a lot of room to grow in this flexible workspace market. I had been a WeWork lessee for many with Regus in the beginning of my career, and so I've experienced all this flexibility that you can find. Also the interaction between the people, as some of them wants to create specific ecosystems where everyone is doing the same thing. Others, they have concepts where they are mixing people with different background and expertise in order to create real value. But Michael is talking about something very different. You're taking the corporate world and scale it down to a new office space, basically, to a new way of setting up the desks and the structures and all that. And I think it does have a future. I mean, I'm totally convinced that people are not going to be working from home. As Michael,
there is maybe like a way to find like an in-between between
you have
in a way and the flexible kind of offices, and maybe like but apparently from what you guys are saying, like it's kind of the end of an era for like all these companies that used to have 9 floors in the same building. So this seems like this is kind of evolving.
Yes, I really believe so. And now, even though companies have the ability to track the productivity of their employees remotely with softwares that are pretty accurate, coming to the office and putting the team together and working side by side is also very important. I've also experienced the corporate world prior this career, and I really agree with what Michael is saying on that matter.
Last word on the issue before we say goodbye to our viewers.
Again, I really hope that it's going to get better in New York very soon. We actually miss New York. We need that energy, and we need the US to be in better shape so that more American company can come in Paris and take some desks. So I really hope we need the Americans to actually get better for everyone.
It is a locomotive. I'd like to thank both of you for your time, your expertise. It has been very, very interesting. A buyer's market apparently in the US and maybe in France as well. More like wait and see in Paris until 2021, but will definitely give us more answers. But it shows how fragile a market can be, especially in New York City. But it recovered from many crises in the past, 1921, 1929, the Great Recession, 9/11, now COVID-19. I think we can expect to celebrate New York resilience in the near future. Thank you so much for watching. Thanks to Alain Azaria from Dalazar, New York, and Mikael Benfredj from Patchwork in Paris. My name is David Benaym. Please comment, like, and share. Thank you to Pablo behind the scene. And I will see you for the next episode of America with a French accent, brought to you via HappsTV, journalism, cross platforms. Be seeing you.
Thank you, David.
Thank you.